Back with First Trades, right here in ET now. Let me welcome on board Manish Tandon, as the MD and CEO at Zensar Technologies. Manish, hi, good morning. Good to have you on ET now. Your stock price, Manish, has tripled this year, especially since you took over in the month of January. Having said that, your growth rate has been sub 0.5% sequentially. When do you see growth coming back? And, just wanted to scratch that point further because stock markets are at a record high. Fed turned but clients are still not really spending much. What's the initial sense on how 2024 is going to pan out for you?
Well, I think it depends on which growth metric you're looking at. I think somehow people just look at revenue growth, while if you look at the valuation models, it is about the earnings per share growth or the cash flow growth. And by that metric, we have done phenomenally well as a company, 60% or so growth. And given the environment that we are, I think 60% growth in earnings per share is a commendable performance, is all I can say. But again, I'm thankful to the investors that they have recognized this, and that has reflected well on the overall stock price. As far as revenue growth is concerned, we have seen revenue growth sequentially. Since I took over, every quarter we have grown 2% or so, but sequentially. But let's see what happens this quarter, because anyway the market remains pretty tough, as you know. And although you won't believe it if you saw the stock prices today, S&P 500 was just 30 points of its high. Sorry. So I would say, given the circumstances, Zensar continues to do well for the investors, and revenue growth will also come as the industry turns around.
Right. I couldn't have not mentioned what the stocks have been doing. But, aside of that, Fed has turned, like I was asking you earlier, but clients are still not spending. What's the initial sense that you're getting on client spends come 2024?
Well, if I was to just look at this quarter, I can tell you that the furloughs that we are seeing in this quarter are deeper and wider than before. And if that trend continues, then we are going to be in for a tough calendar 2024. I think what you're seeing in the stock market is, as I was reading somewhere, there are these magnificent 7 stocks which are up 75%, and the rest of the stocks are up barely 8% or something like that. So I think there is a 2-track thing going on, and the optimism in the stock market is actually not reflecting in the optimism as far as budgets are concerned.
What about Hightech? Do you see it recovering?
So Hightech vertical, see, the maximum amount of furloughs, etc., happen in the Hightech vertical, and that happens in Q3. This quarter, which is the Q3 for if your financial year is from April to March. So I would say, as I mentioned before, we are seeing deeper and wider furloughs than what I have seen in the past in the high-tech space. So I'm not very optimistic about demand by picking up in this sector, at least for us. Us means our industry. I would also point out that while all of these magnificent 7 are all in the tech sector, most of them have actually cut down on the number of people that they have. If you were to compare from COVID times to today, and so while the stock prices are doing well, these companies are also trying to conserve cash and improve their profitability, and that is not reflecting in increased budgets for us.
Morning. Now, your order inflows have been strong. Last quarter, close to $200 million. Question is, what is the deal making been this quarter? What's the outlook ahead?
No, I think the deal making, typically post Thanksgiving till beginning of the year, it's a slow period for deal making because most people are wrapping up, the budgets are coming to an end, they are looking to the next year, a lot of people are on leave. So till before Thanksgiving, the deal making was normal. What was normal means it was same as Q2 or the previous quarter. And anyway, this is at this time a bit of a slowdown is there because of holidays. So and it takes time for the booked business to reflect into build business also. That one needs to remember.
Sure. But you would perhaps be best positioned to answer this. Any signs of a pickup in the US? Because in the second quarter, Europe was growing in double digits and US declined.
I personally think that till the interest rates remain high and till the quantitative tightening continues by the Fed, the budgets will remain muted. The industry will remain muted. There's a lot of euphoria around the Federal Reserve speech earlier this week or last week, and the market just went up. But if you look at it, this is not really reflecting into the brick and mortar and the real economy, and that has been the problem. In fact, if one were to draw a correlation between stock prices and quantitative easing, there will be a very strong correlation between the two.
Europe was growing in double digits and that has declined. How do you see things moving there, and how will 2004 be different from 2023? I mean, 2024 will be different from 2023.
Yeah, I would say that Gen AI is definitely, we are all very positive and bullish about what Gen AI can do for us. But again, I believe that the technology still has to go some distance before it's ready for prime time. But yes, we are quite bullish that Gen AI will be a net positive for our industry, like any other technology has been in the past.
And, can you give us a sense as to when that is going to show for you in the revenue? Because, for instance, you had Accenture saying they booked $450 million in the Gen AI project. So I wanted to understand for your company as well.
So the revenue is, it's bringing in revenues. It's not that it is not bringing in revenues, but the quantum of revenues per project that you sign still remains small. It is that you can sign one project and make 15-20 million out of it. It still remains at an experimentation stage. It still remains at a stage where people are just dipping their toes in the water to sense what is going on, doing more of demos, proof of concepts, etc. And while these are translating into revenues, the per unit value of the deal is not very high.
Okay, thank you for joining in. So yes, that's the view coming in from the management of Zensar Tech, that as of now, a little bit of caution heading into the next year. Margins will remain range bound, and yes, post Thanksgiving, the deal making activity as well has slowed down. That's the chart though, holding out by about 2.5% in trade today.